think that if you look at the numbers from yesterday, you see that we all know that we have energy costs have come way down due to the administration really just selling an unprecedented amount from the Strategic Petroleum Reserve. And gasoline prices have come down. Used car prices have come down modestly. And some were expecting a negative number. And what it showed is, wages are pretty sticky and rents are pretty sticky. And those increased. I think we lose sight of the fact that the Fed's balance sheet prior to the global financial crisis wasn't even $1 trillion. They hadn't even printed $1 trillion going into, call it mid 2008. And then we quadrupled the Fed's balance sheet from the financial crisis just to pre-COVID. We were about 4.1 trillion. Now we're at 8.8 trillion. So during COVID, we doubled the Fed's balance sheet again from 4.1 to 8.8 trillion. So, the Fed is responsible for all of the inflation. And now we're hoping that the Fed can get their hands around it. And while they went way too big, or they printed way too much money going into COVID, I'll give them the benefit of the doubt here. None of us knew how bad that virus was going to be as far as our economy is concerned. But now we have a scenario where they're raising rates so aggressively, meaning just in the last 6.5 months, they've taken it from 0 to 2.5. We actually are talking about whether they're going to do 75 or 100, which is kind of panicked levels of raising rates. And when you raise rates, it doesn't show in the economic data for 9 to 12 months. So I think they need to be really careful. They overdid it on the way up, and I think they're going to overdo it on the way down in a major way.
If it's just the open spigot of dollars that's causing this, which is what you're describing, what's wrong with gold, and why is the dollar so strong? That causes people to think it's other things, Kyle, and other people point to how much money we've spent fiscally that the Fed has enabled. And then the people that defend that spending will come back and say it's supply chain, it's Putin, and there's these one-offs that aren't. You just said it was solely due to the Fed printing too much money. I just don't see why is the dollar so strong, and why is gold just dead in the water?
Gold is so we'll start with gold. Private crypto came about and had a multi-trillion-dollar market cap as an asset class. I think a lot of the quote inflation money went into kind of the new digital gold, and it became highly speculative. So I don't think gold.
How about the dollar? Why is the dollar so strong? If we're printing so many, is that a beggar thy neighbor? Everybody else is even worse.
Yeah, the dollar is a function of the differential in interest rates. Like you look at the differential between U.S. and Japanese rates, or U.S. and European rates, or U.S. and Asian rates. Our rates, you think at our one-year treasuries are trading 3.90, 10-year treasuries are trading 3.5. Go look at where 10-year Japanese bonds are, 10-year German bonds are. All of the money around the world is coming to the U.S. for high yields. And, if you go back to Bernanke's helicopter speech, and I've read it probably 10 plus times, it's important to note that he says if you get to the zero lower bound, you need to get as far away from it as quickly as you can. We've been at zero rates for essentially, 12 to 14 years. And now we're aggressively raising rates. You brought up the Volcker days, Joe. Debt to GDP during 1979 was only about 32%. Today, it's 100%. The on-balance sheet debts are almost 24 trillion. And every 1% hike in rates costs us, let's just say, for the ease of math, 240 billion. We're spending 12% of our national budget on interest as of July. And now we're talking about raising another 75, and 25, or whatever it is when you think about the Fed dot plots and you look at where Clarida and the other folks are. We're somewhere between 4 and 4.5%. I think that will bring our economy to its knees. And the Fed's targeting unemployment and payroll employment. And I think, some say we need to get to 4.1%, 4.5%. Some saying in white papers written recently, 6%. I mean, these are crazy times that we're talking about, Joe. Volcker can't live today because it will break us as a country. So I don't think we can raise rates this quickly without having severe negative consequences in the next 9 to 12 months.